3 years ago, HPE CEO Antonio Neri made a huge commitment that the IT giant would move its entire product portfolio to a consumption-based service, pivoting to realize the opportunity for recurring revenue, hybrid cloud, and meeting its customers where they are. Today, Antonio joins the show to share how that journey is going and gives us some insight into why the market should be excited about HPE's future. All this and more, you're tuned in to Making Markets.
This is the Making Markets podcast, brought to you by Futurum Research. We bring you top executives from the world's most exciting technology companies, bridging the gap between strategy, markets, innovation, and the companies featured on the show. The Making Markets podcast is for information and entertainment purposes only. Please do not take anything reflected in this show as investment advice. Now, your host, Principal Analyst and founding partner of Futurum Research, Daniel Newman.
Hi, everybody. Welcome back to another exciting edition of the Making Markets podcast. Very excited about this show. I have Antonio Neri, HPE CEO, joining me here. I love these shows. I love these chances to have these kinds of interviews here. It's why I started the show. Of course, as a reminder, I bring these CEOs on. This show is not for investment advice. You heard that in the early disclaimer, but coming off the company's Security Analyst Day, this is going to be what I think a great conversation. So without further ado, Antonio, welcome to Making Markets.
Hey, Daniel. Thanks for having me.
Very excited. I don't really think an introduction is required. We did that in the cold intro. Everybody heard who you are, and I'm just thrilled to have you here. We've had many chances over the past few years to have discussions. As you know, my firm, Futurum Research, covers HPE very closely in many different capacities across your business. It's been a big week for you, though. So if you don't mind, I'm just gonna dive right in.
Sure.
Absolutely. All right. So over the last week, you had your Securities Analyst meeting. And this is where I want to start, because I've got some big questions that goes back to your whole strategy that I've been following over the past few years. But tell me, the Securities Analyst Day in the meeting went great as far as I'm concerned. But tell me, what were your key headlines, messages, and thoughts to how the market reacted to the event?
Sure. Well, again, Daniel, thank you for giving me the opportunity to speak to you and your audience. Every week is a big week, by the way, Daniel. Now, last week was a little bit different because, as you said, we hosted our annual Securities Analyst meeting. This is the event that every year Tarek, I, and sometimes a member of my executive team go through the strategy, where we are on that strategy progression, and share the shareholder value creation framework. And obviously, we provide the outlook for the next year. We are very excited about the momentum that we have, but it was important to reground everyone where we are on our journey. And the headlines are very simple, very, very simple, right? Number one is that HPE is at the nexus of the mega trends that we see today. Since you have been following me for some time, you know that in 2018, I said the enterprise of the future will be edge-centric, cloud-enabled, and data-driven. And unfortunately, through an event like the pandemic that we saw, we were able to validate those trends. But the reality is that HPE already knew what's happening at the time with the customers in transition through the digital transformation. And the pandemic validated those trends. And so what are those trends? Number one, we all need connectivity. The connectivity is an essential service to deliver against the digital transformation opportunity. And that now is even more important because obviously we live in a distributed enterprise. Number two is the fact, obviously, cloud is an experience for all the workloads and data. And number three is the fact data is becoming the most important asset enterprises have. But at the same time, one trend that crosses across all these three mega trends is the pivot to consume IT as a service. And again, in 2019, we said we're going to offer everything as a service. So again, all of this is happening now at the time where the company has been executing against those. But for investors, the headline was very simple. We are very bullish about this strategy, which will create value for our shareholders. And those metrics are very simple. free cash flow will be 6.5 to $7 billion over the next 3 years on a cumulative basis. We're going to expand our operating profit by 10 to 15%, and we're going to grow the company between 2 and 4% on a revenue basis. Notwithstanding, there is a point and a half for headwind because when you transition to as a service, a lot of the revenue get deferred. But that's good because in the end, it's much more profitable revenue than the one we had before. And to me, the most important one probably in the end is customer relevancy. And that is making HP more relevant to customers than ever.
Yeah, I've been talking about this for a long time, and I feel like there's been a bit of a disconnect. And I'll hit you up with that more later, Antonio. But I feel like you're on the right path. In fact, the broader markets are validating that regularly. Competitors going down the same path as you. You mentioned about the 3 years ago. I remember being there back in the era of live events, which thankfully are slowly beginning to return. Um, you standing up there on the stage, it was early in your tenure as CEO, and you made a really bold statement. And over the years that followed, I've been tracking this closely. I wrote a white paper that actually specifically said why everything as a service and why HPE was doing it right. And this was, again, before many of the players that have now announced to participate in this space had made any commitment or comment whatsoever on their strategies there. So you said 3 years, we will take our entire portfolio, we will make it all into a service that can be consumed like the cloud. And it was ahead of its time. Okay, but it's been about 3 years. So give me the quick, how are we doing?
I think we're doing great. And what's interesting, Daniel, is that it's being validated also by our competitors. They're all entering this market. Now they see it. But we have at least 40 years of leadership advantage. Building an as a service model is not simple. It's not just putting financing wrapper around your technologies to deliver a true consumption experience that ultimately delivers outcomes on an SLA based. And that's a very different value proposition than just financing your infrastructure. And it takes time. It takes time. You build in a back-end set of capabilities that allows us to do this at scale, be able to automate everything in that offer, and ultimately be comfortable that you are going to commit and deliver against those SLAs. But we as a company have gone through that journey already, not only building the cloud operating model on the back end so we can provide connectivity in a subscription model, a cloud experience to your point, not different than you can procure in a public cloud, or run your analytics now edge to cloud. Because one of the biggest challenges customers have now today is that they need to accelerate insights from the data, but the data is siloed. Sometimes, in a multi-generational IT set of systems, sometimes in legacy architectures. And we are simplifying all of that, what we call a data-first modernization approach to our platform, which is the HPE GreenLake platform, the edge to cloud platform that you can consume as a service. And then listen, it's not just innovation in the solution, it's innovation in the business model, and it's innovation in your IT systems that come together. And it's not coincidence, Daniel. I think that's the important part here. As I said in my closing remark last week, we are not here by coincidence. This has been a journey over the last 3.5 years. And that's why I now give us that confidence, that bullishness to deliver those commitments from the financial perspective for the 22 and 24, which is an acceleration of everything we have done.
Yeah, and the growth and the ARR, the consumption, these are things that every business out there are striving for. And if I was looking from the outside in, I would be feeling really confident that, hey, let's look at the predictable revenue that this company has. Let's see what's in its pipeline. Let's see what's already been committed. Then let's look at the service expansion. Let's look at net revenue expansion within the client base. We've already identified for certain that public cloud is not going to win all the workloads, despite rumors. It's going to be very well diversified and distributed, and likely it'll balance out at some point. And my analyst instincts say it's going to be closer to a 60-40, 40-60 type of split when all is said and done. And I don't see it really ever budging completely beyond that. And by the way, the hyperscalers have validated that through their own product developments. They know it's not all coming to the public cloud. Again, all validation that you were on the right track. Now, you started off, and you talked about this during SAM, You talked a little bit about this earlier in the conversation. The pandemic was challenging, and for
Yeah.
big IT companies, kind of in that traditional IT OEM, we know you're evolving beyond that reputation, but that did lots of capex, lots of big iron. This was tough because on-prem investments almost came to a halt. So unlike some of the SaaS companies and pure cloud companies that had that instant catapult of growth, you guys had to weather this storm a little bit differently. But yet, throughout this time, you've been making acquisitions. You've made this shift to consumption. You're expanding software, data services. This double down on the hybrid cloud. I'd love to talk just a little bit beyond the everything as a service, or XaaS, as I like to call it. Say, okay, what's next? Is it all about service expansion, or what?
I think it's all about data. Honestly, I think that's what it's going to come down to. In one of the comments I made, that data is not only the most precious assets, but data is the currency that power the digital economy. And I believe data one day will be recorded in balance sheets of companies. That's how valuable data has become. But the problem, Daniel, is, as you know, we are not using the full potential of that data. At best, we may extract in 10% of the insights. And if we are able collectively to extract more insight from that data and be able to share insights, not data, which is two different things, we actually can go solve not just business problems, but some of the biggest societal problems we are dealing with. Think about it. The COVID vaccine, it took 9 months to get to it. And it was because we were able to share insights across multiple, research entities, and because we had the computational capabilities. By the way, Hewlett Packard Enterprise offer a lot of that, and for free, including our patents, to help accelerate that research. But those are the things that we think about going forward. But to your point, now you think about enterprises, their journey, right? They were in a data center, in big infrastructure, CapEx oriented. They moved to a hybrid cloud, multi-cloud approach. Obviously, mobile first approach still plays a big role because a lot of our business gets done through mobile phones these days. But now they need to go into the next phase of this, which is the age of insights, and they need an edge to cloud architecture. And that's where Hewlett Packard Enterprise, with our HPE GreenLake edge to cloud platform, is going to play a big role because, again, we are at the intersection of those mega trends, but we are building an experience. We are building a unified experience that drives that data first modernization, because I believe that's the biggest opportunity enterprises of all sizes have going forward.
Yeah, absolutely. And by the way, when you mention experience, I've been very positive on the development within GreenLake Central, the control plane layer, which is what I feel to some extent has been missed from the prem companies that are trying to help move to the public clouds. What people really loved about public cloud is not that they want to put their workloads in someone else's cloud. They want to actually have the simplicity to be able to scale up, scale down, pay. I kind of always jokingly say, swipe a credit card and just let it bill as needed.
Yeah,
The old SaaS model, Antonio.
yeah.
And you've really worked hard, though, from a prem standpoint, and hybrid standpoint, to replicate that experience and create a software or control plane layer that emulates what has been so well received by CIOs and ITDMs that are investing heavily in the cloud.
Well, actually, we're taking a step further, right? It's not just about emulating, it's about addressing the pain points customers are dealing every day. It's not just about the ability to swap a credit card and pay only for what you consume. It's the ability to learn, try, buy, and run their environment from a single console that ultimately they can see everything that's happening in the enterprise. Remember, Daniel, that you and I talked about this. I think the CIO of the future is going to be a service provider, not someone that focuses on technology, architecture, speeds and feeds, and all the machination that goes with it. Is actually focus on innovation. And therefore, to focus on innovation, you have to become a service provider and shift a lot of your resources into that data aspect that we talked earlier. And that's where HP GreenLake, through our portal, we are giving them the ability to learn, try, and buy. By the way, you can buy even a CapEx for that matter. But ultimately, the way you deploy and manage is in an as-a-service orientation. And then you can see there everything you have across your enterprise that you do with Hewlett Packard Enterprise. And obviously, more and more, we want them to adopt our technologies, whether it's, you know what, I'm going to subscribe to an access port, you know, maybe a switch or a Wi-Fi, or maybe I deploy, you know, elastic compute and storage as a service, or maybe I deploy a workload optimized solution for SAP or VDI or backup and recovery or data protection. Or, you know what are my exposure in terms of cyber, right? And so forth. And then is my data in compliance? And then ultimately figure out on the fly, very dynamically, what is the best place to host that workload and move that data if necessary. Because in the end, what we're doing is bringing the cloud experience to all the workloads and data wherever they live and be able to run it from there. And that to me is both a CapEx and OpEx reduction. And then obviously free up human capital to focus on innovation.
Absolutely. I've always said nobody invests in technology to solve technology problems. Businesses, they make the investments in technology to solve business problems. And so we've really seen a shift to almost everything as a service, but almost outcome as a service, right? The real thing people want to pay for is if you can start to guarantee outcomes, people will pay almost anything for that. So predictability, that's why everyone loves ARR so much. Predictability, that's from the investor standpoint, but from the technology standpoint is, can this technology get our business where we need to go? So great points, Antonio. I want to spend the last few minutes we have together talking about something that's just caught my attention, and I know it's caught yours, and that's all this success, all this progress, you know, strong double-digit growth in consumption, you know, being the first in, really the first in to get this, an established market, being bold in your strategy, but the share price, even as the markets climb back across the board, has been somewhat stagnant. It's struggled to budge. I mean, what do you attribute this to? Or do investors not understand it? Is Wall Street not doing a good job explaining it? Are there doubts from the market? I can't wrap my arms around all the success not translating to an increase in the share price.
Well, I think it's a combination of all of that. And at the same time, I think investors are missing a significant opportunity. I mean, not to get into the financial acumen associated how stock is being valued, but the fact of the matter, listen, we just guided for fiscal year 2022, $1.96 to $1.10 with a midpoint, right, of $2.03. So if you take just a 10-time multiples, the stock should be $20 per share. If you look at the free cash flow that we got it for 2022, we got a $1.8 to $2 billion, which is the $2 billion magic number that people have been waiting for. Again, on 10 times on forward-looking free cash flow, that would be $20 per share. No matter how you look at it, it should be at least $20 per share. That said, I think sometimes, you know, the street gets fixated on certain things. And one of the things that the street gets fixated on is compute. Well, let me tell you, compute is a $12.5 billion business that we expect that to grow for many reasons. Number one is the fact that we have pivoted that business in different segments of the market where we see growth. Number two is the fact that through the HPE GreenLake offer as a service, we see a significant pull-through of compute on-prem in a colo or at the edge that you can consume as a service. And then number three also is the fact that we are integrating compute into these workload optimized cloud native stacks. And then last but not least, there is continuous structural changes in compute, new architectures and new options that ultimately drive what I call 2/3 of the structural change, which drive AUPs up. And so we feel that business is important because it gives us a resource that customer need. And by the way, it generates a ton of free cash flow. And because we are transforming that business into a SaaS business in terms of the software that runs on compute, that will expand margin. And if you look at the guidance we give them, is actually a point higher than we guided last year. So it's 11 to 13% margin. But in their minds, they believe, well, that's under secular pressure, and therefore I'm not sure you can grow. Well, if you look at our track record, we always deliver what we said. And in fact, we always drop upside. And so that to me is a deposit in the credibility bank. But I think, you know, the street sometimes get fixated on the things. Listen, on our side, we need to tell the story better. And I think the way we did that sound was, I think, very, very crisp and bullish. And over time, will take few maybe days and weeks for people to sync it. But ultimately, you have to do what is right in terms of positioning the company into the future. And I believe as you deliver the results, the stock eventually will take care of itself. Because right now we are significant undervalue, and there is no justification for that. So eventually, the stock will catch up. But I'm proud of what we have done since 2018. And I think this company looks very, very different than then.
Yeah, I think you hit a lot of things on the head. I've said if I had to really simplify the answer to what I believe, Antonio, it's been the company starting to be treated as a more like the way cloud consumption software SaaS companies are treated and the multiples that are associated. And I think as that revenue number grows, that commitment, that backlog, the delivery, the services on GreenLake, and as GreenLake continues to become more and more the center point of focus around the future, I think the outsiders can start to recognize it. Now, with the last minute or two I have with you, that's the question I want you to finish on for me. Okay, you've said it. It's been crisp. Sam, you delivered it crisply. You're doing a good job here of delivering the message. What can you do? How do you shift the perception and create that confidence in the market? What are a couple of, things that can be done to start that shift today instead of everybody always waiting? All jokes aside, Mark Zuckerberg can announce a project for 5 or 10 years out. People get excited. You're announcing something that's real, that's tangible, that's needed, that's being purchased and invested in right now. What gets the investors, Wall Street, business media on your side?
Well, I tend to be a very pragmatic person, right? I cannot predict the future 10 years out, to be honest with you. I may have a vision for it, but I don't think I can predict it. Who knew the pandemic would hit us right in the front of our head at the early of 2020? Nobody knew, right? And that was a surprise. We had to adapt. But what I can tell you right now, I'm very, very confident and excited about what we're going to do the next 3 years. And I believe our customers start to understand it. And what customers get it, obviously, you are going to have a pull for what you do. And listen, demand right now is off the charts. We have demand that I had not seen in my entire career here. It's just remarkable to see, whether it's GreenLake, high performance computing, our data management services, our connectivity. That's what guides me. And obviously, you have to deliver what you say, And what we're going to do a little bit different, Daniel, since you asked the question, Tarek and I are going to talk to investors one-on-one now in the next handful of weeks, because we want to give them the next click down. Because, one thing is the sell side, and you have to do that. But the most important part you can do is talk to the investors. The investors care about a lot of things. They not just care about the financial side. They care about your ESG strategy, which I covered as well yesterday. Care about the durability of this, which we believe is very durable. So those are the things we're going to do slightly different. But right now, it's all about execution, Daniel. It's all about getting it done day in, day out. As always said, a quarter has 13 weeks, and every day counts. But what I'm doing as well, myself leading a group of people that are accelerating this transformation to go further and faster. And I believe 2022 will be the breakaway year for Hewlett Packard Enterprise.
That's a great way to leave it, Antonio. And I want to thank you so much for joining me here on Making Markets. You are invited back whenever you would like. Of course, after earnings, after your next SAM, we'll figure out a time. We'll have to have you back, obviously, to continue this conversation. Much more to be had here. And that's it, everybody. Antonio Neri, HPE CEO. What a great conversation. I hope you absorbed it. Definitely check out some of the content that I mentioned in the pod, some of the papers we've written. We've covered this closely. It was really great that Antonio came, validated some of the things that I've been saying for some time. And then, of course, hopefully for you, made some things clear that maybe you didn't already understand. So hit that subscribe button. We appreciate all of you here on Making Markets. Come back next week. We'll have Juniper's CEO as well as Poly's CEO joining the show. So much more to come, but we got to say goodbye for now. We'll see you later.
Thank you for tuning in to Making Markets. Enjoy what you heard? Please subscribe to get every episode on your favorite podcast platform. You can also watch us on the web at futurumresearch.com/makingmarkets. Until next time, this is Making Markets, your essential show for market news, analysis, and commentary on today's most innovative tech companies.